Hello and welcome to the day ahead. It's Tuesday, February the 14th. I'm Andrew Gagan. Well, global markets rose overnight as US Treasury yields fell, increasing the appetite for risk, with investors optimistic that tomorrow's economic data will show inflation is easing in the States. Beaten down mega-cap growth stocks benefited from the improved sentiment. Apple, Amazon, Alphabet and Microsoft all bounced higher, with Microsoft boosted by an upgrade in its price target by Stifel, which sees the tech giant gaining ascendancy over Alphabet's Google search dominance with its integration of the AI tool ChatGPT. Meta Platforms gained on reports the Facebook parent is planning fresh job cuts. Well, most S&P 500 sectors climbed into the green, although the energy sector fell as crude oil prices slipped. And in Europe, defence stocks surged on news that India is aiming to triple its defence exports to $5 billion by 2025. Shares of Thales, Airbus and Rheinmetall all rising. Well, US Treasury yields turned lower in the session after earlier hitting their highest levels since the beginning of the year. The yield on the 10-year note falling to 3.72% and the 2-year to 4.54%. After rising earlier, the dollar fell against a basket of major currencies, the Aussie currently trading at 69.6 US cents. And ahead of the latest reading of US inflation tomorrow, which is expected to show prices climb 0.4% in January, markets have again been reminded that the Fed needs to continue raising interest rates to bring inflation under control. Fed Governor Michelle Bowman saying we have to bring inflation back down to our 2% goal. In order to do that, we need to bring demand and supply into better balance. Meanwhile, a New York Fed survey shows wage growth expectations fell the most on record in January. Median expected growth in household income declined 1.3% for the month. Eurozone economic growth is expected to be stronger than initially forecast this year, while inflation is likely to be lower. That's the view of the European Commission, which says economic growth in the 20 countries using the euro is likely to be 0.9% this year rather than the 0.3% predicted last November. So, to the local share market, it is set to bounce back from yesterday's losses, with ASX Futures currently up around 0.2%. Oil prices have slipped on short-term demand concerns and the US inflation rate, Brent crude at $86 a barrel. Aluminium prices have fallen to 5-week lows on surging inventories, while the copper price has been boosted by Chinese data showing a jump in new bank loans. And gold has dipped ahead of January's consumer price index data, spot gold down 0.5%. And the crypto market is under pressure on concerns about the crackdown by the Securities and Exchange Commission on staking products and stablecoins. Now, among the companies reporting locally today, Ansell, Computershare, James Hardie, Seven West Media and Temple & Webster. And biotech giant CSL has reported a 10% jump in its first half profit thanks to increased blood plasma collections and the acquisition of Swiss drug maker Vifor Pharma. Underlying net profit after tax for the half year was $1.96 billion compared with last year's $1.72 billion. And that is your day ahead. We'll see you again tomorrow.